Good morning, crypto warriors. It's December 1st, 2025, and the market is bleeding red. Just hours ago, Bitcoin took a nosedive, plunging below $86,000. Ethereum followed, tumbling down to $2,823. The entire global crypto market cap has shrunk by over 5%, now sitting at just $3.01 trillion. Out of the top 100 coins, a staggering 96 are in the red. We've seen over $700 million in liquidations in a single flash. The big question on everyone's mind is, why now? What triggered this sudden, brutal sell-off? Let's break down the chaos and figure out what's really going on behind the scenes. In a matter of hours, Bitcoin shed $5,000 from its price, wiping out a colossal $210 billion from its market cap. The strange part? There was no single catastrophic piece of news that hit the wires right before the drop. This wasn't a scheduled announcement. This was something different. It looks like a massive leverage reset. The futures market was insanely over-leveraged with $787 billion in open interest, completely dwarfing the $135 billion held in ETFs. This created a fragile house of cards ready to collapse at the slightest tremor. And that tremor came from an unexpected place, Japan. Japanese bond yields spiked with the 2-year hitting its highest level since 2008. This caused the yen to surge, and now traders are pricing in a 76% chance of a Bank of Japan rate hike on December 19th. The market smelled fear and immediately switched to risk-off mode. The CoinDesk 20 index, a broad measure of the crypto market, plummeted by 7%, reflecting the widespread panic. Then, the news that every crypto veteran dreads finally dropped. China's central bank, the PBOC, issued a stark new warning. They reiterated their stance on the illegality of virtual assets and are now specifically targeting stablecoins, citing concerns over financial fraud and cross-border capital flight. This sent a fresh wave of FUD, or fear, uncertainty and doubt, ripping through the Asian markets. Regional stocks began to drop as investors got spooked. However, the reaction in the West has been surprisingly muted. The US market seems to be shrugging it off, with ETF inflows remaining steady for now. In a direct counter move to China's crackdown, Ripple just announced it's expanding its payments license in Singapore, a major crypto-friendly hub. They're pushing forward with XRP-based payment rails, proving that while one door closes, another one opens in the world of regulated digital finance. Now let's zoom out to the macroeconomic picture, because there's a huge shift happening right now. The Federal Reserve's massive $6.6 trillion quantitative tightening program is scheduled to end today, December 1st. Many analysts, including Fed Chair Powell himself, have hinted at what's being called de facto easing. This could inject a huge amount of liquidity back into the markets, which is historically bullish for assets like Bitcoin. Kathy Wood from ARK Invest remains optimistic, reaffirming her price targets for Bitcoin in the $92 to $100 and $1,000 range. But here's the catch. Gold has actually outperformed Bitcoin year to date. Plus, there are growing concerns that AI stock valuations are in a massive bubble, ready to pop. This all points to one thing: extreme volatility ahead. The markets are on a knife's edge. Polymarket odds currently show an 87% chance of a Fed rate cut this December, which could be the fuel the bulls are waiting for. Let's dive into the altcoin world and see how it's faring amidst the chaos. Hyperliquid just unlocked 1.75 million HYPE tokens, adding new supply pressure to the market. On the technical side for Bitcoin, the Relative Strength Index, or RSI, has dipped to 30. This level is often considered near a bottoming signal, suggesting the sell-off might be getting overextended. In a sign of institutional conviction, BlackRock continues to hold on to its 777,000 Bitcoin, despite seeing $3.79 billion in outflows from its fund. This shows the long-term players aren't flinching. Meanwhile, XRP ETFs are quietly gaining traction, now managing over $800 million in assets. And on the Ethereum network, the gas limit has remained stable at 180 million, which is a good sign for network health. In a bit of fresh RWA or real-world asset news, a company called PharmaTrace has raised $300,000 worth of HBAR to build a drug tracking system on the Hedera network, showing that real-world use cases continue to be developed regardless of market panic. So, where do we go from here? The Crypto Fear and Greed Index has plunged to 28, signaling extreme fear in the market. The Altcoin Season Index is at 35, which suggests we could be on the verge of a rotation out of Bitcoin and into altcoins if BTC finds a flow. But there are still some major warning signs flashing. We've seen a massive $7.5 billion worth of stablecoins flow onto the Binance exchange from whale wallets, which often precedes either a big buy or a big sell. The trading volume during the bounce attempt back to $89,000 was worryingly low, suggesting a lack of conviction from buyers. If you're looking for the safest place right now, it's probably best to stick with the blue chips, Bitcoin and Ethereum. This is not the time to be gambling on low-cap, unproven projects. As for the 2025 bull run, the big institutions are still saying yes, they're playing the long game. But in the short term, all eyes are on the China FUD and whether this escalates or fades away. That's a wrap on today's chaotic market update. If you're selling, smash that like button. If you're holding or buying the dip, let me know. Make sure to subscribe and turn on notifications so you get these daily alerts right away. And comment DYOR down below to show you're a savvy investor. Remember, none of this is financial advice. You must always do your own research. In my next video, I'll be covering the top 5 coins that have the best chance of surviving 2025. You won't want to miss it. Stay safe out there and peace out. Good morning, Crypto Warriors. It is December 1st, 2025 and the market is bleeding. We woke up to a sea of red. Bitcoin has slid all the way down to $86,000. Ethereum is struggling at $2,823. The global crypto market cap took a massive 5.2% hit, dropping to just $3.01 trillion. Out of the top 100 coins, 96 are in the red. We are talking about over $700 million in liquidations across the board. The big question on everyone's mind is, why now? What's causing this sudden brutal sell-off? Let's break it all down. The star of this horror show is, of course, Bitcoin. In just a few hours, BTC fell by $5,000. That single move wiped out $210 billion from its market cap. What's strange is that there wasn't a single major news event that seemed to trigger this. It looks more like a classic leverage reset. The futures market was massively over-leveraged, with $787 billion in open interest, completely dwarfing the $135 billion in ETFs. At the same time, we're seeing macroeconomic shifts. Japan's 2-year bond yields just spiked to their highest level since 2008, causing the yen to surge. There's now a 76% chance that the Bank of Japan will hike rates on December 19th. This is putting global markets into a serious risk-off mode, and crypto is feeling the heat. The CoinDesk 20 index, a broad measure of the market, is down a painful 7%. Now let's talk about the elephant in the room. China. The People's Bank of China, or PBOC, has issued a fresh warning about the risks associated with illegal virtual assets and stablecoins. They're citing concerns over financial fraud and cross-border capital flows. This news sent a ripple of fear through Asian markets, and we saw stocks drop alongside crypto. The FUD, or fear, uncertainty, and doubt, is spiking. Interestingly, the US market seems to be shrugging it off for now, with ETF inflows remaining positive. It's a classic East versus West story. While China doubles down on its crackdown, we're seeing others build. For example, Ripple just expanded its payments license in Singapore, a move designed to strengthen regulated pathways for XRP. directly countering the narrative of a global crypto shutdown. So, is it all just China? Not quite. We have to look at the Federal Reserve. The Fed's massive $6.6 trillion quantitative tightening program is scheduled to end today, December the 1st. Many analysts believe this could be a form of de facto easing, as Fed Chair Powell might be signaling a pivot that could inject more liquidity back into the markets. Cathy Wood from ARK Invest is still holding strong on her prediction, targeting a range of $92,000 to $101,000 for Bitcoin. However, not everything is bullish. Gold has actually outperformed Bitcoin year to date, and some experts are warning that AI stock valuations are getting overheated, which could spill over and create more volatility for risk assets like crypto. The prediction markets on Polymarket are pricing in an 87% chance of a Fed rate cut this December. The macro picture is incredibly complex right now. Let's zoom in on the altcoin market and other specific tokens. We've seen Hyperliquid unlock 1.75 million HYPE tokens, adding some sell pressure there. On the technical side, Bitcoin's Relative Strength Index, or RSI, is sitting at 30, which is historically near a bottoming signal. It suggests we might be oversold. Even with the price drop, institutional conviction seems to be holding. BlackRock still holds a staggering 777,000 Bitcoin, despite seeing $3.79 billion in outflows recently. XRP ETFs have quietly grown to $800 million in assets under management, and the Ethereum gas limit is holding stable around 180 million, indicating network usage hasn't fallen off a cliff. In new developments, we saw PharmaTrace raise 300,000 HBR to build a drug tracking solution on the blockchain, showing the real-world asset or RWA trend is still booming. So, what are the predictions and what should you do? The Crypto Fear and Greed Index has plunged to 28, firmly in fear territory. The Altcoin Season Index is at 35, which could suggest a rotation from Bitcoin into altcoins might be on the horizon if BTC stabilizes. But there are warning signs of a deeper crash. We saw a massive $7.5 billion worth of stablecoins flow into Binance, a classic whale move to either buy the dip or prepare for more volatility. The trading volume during the drop from $89,000 was suspiciously low, suggesting a lack of buyers stepping in. For now, the safest plays are to hold your core positions in Bitcoin and Ethereum, and to avoid gambling on speculative, low-capped shitcoins that could go to zero in this environment. Will the 2025 bull run continue? The institutions seem to think so, but with the China FUD swirling, it's crucial to stay vigilant. Watch the charts, watch the news, and be prepared for anything. That's a wrap for today's deep dive. This market is a roller coaster, so buckle up. If you found this breakdown helpful, smash that like button. If you're selling right now, let us know why in the comments. And if you're holding strong, tell us that too. Don't forget to subscribe and hit that notification bell for daily market alerts so you never miss a beat. Remember, this is not financial advice. Always do your own research before making any investment decisions. Stay safe out there. Coming up next, we're breaking down the top 5 coins that are built to survive a 2025 market crash. You won't want to miss it. Peace out!